touch base with Jahangir Aziz, head of EM Asia Economic Research at JP Morgan. He joins us all the way from New York. Jahangir, it's great to have you on the show. Thanks very much for taking out the time. You're pretty much in the heart of all the action where these announcements are coming through. This is, perhaps the first few steps into what can seem like a bit of a struggle between U.S.-China relations, over the long term. What do you make of this announcement, and how do you see things unfolding from here?
I think, the announcement was basically following up on what the USTR report was, about 3 weeks back. So this wasn't a surprise. They actually did say that they would come out with a list of 1,200 odd items on which would be equivalent to about $50 billion of worth of exports on which they will impose the 25% tariff, and they've come up with that. China had already said that they would be retaliating by imposing tariffs. Imposing tariffs on agricultural-related products worth about $3 billion. And that was mostly in response to 232, which was on aluminium and steel. So we'll have to wait and see whether China retaliates on this one, on the 301 list that came out. Our sense, obviously, is that that China's response is going to be measured. It's going to be China will want to be seen as being responsible, and therefore it is not going to be something that should really upset in any major way, trade relations either with the U.S. and China or with the rest of the world. Having said that, I think what we are really waiting for is the next shoe to drop, which hasn't really been taken into account by analysts and others, that the tariffs aren't really the problem. The problem really is the non-tariff sanctions.
Right. Jahangir, I was just going to come to that, because it seems like this is not going to stop here. Just when you thought that there is a truce happening between China and US, you've got China retaliating just last evening. What happens next? Do we see some retaliatory moves coming in from US again? And is this the tipping point of the much feared trade war then?
No, look, if you look at the USTR report, right, it clearly states out that there are two sets of problems. One is related to tariffs, which they have taken, which they announced, and which they're basically laying out the actual items on which they're going to impose the 25% tariff. Then there is the entire non-tariff section, which includes concerns that the U.S. has over intellectual property rights. It has concerns over licensing restrictions, about joint ventures, about transfer of technology, about overseas investment by Chinese corporates into the U.S. We do not know what the exact form of those quote-unquote sanctions will look like. We are waiting for them. Those are the ones that I think, as far as we are concerned, we are much more concerned about. That those are not things that can be easily quantifiable. Those are the ones that can have serious medium-term impact. Those are the ones that can change the supply chain, global supply chain dynamics as we have come accustomed to over the last 10, 15 years. So that's where where most of the attention, as from our perspective, is right now. It's not so much on the tariffs. These are things that are quote unquote manageable. This isn't something that is going to upset the global trade relations at this point in time.
Jahangir, closing comments from you. What do you expect from tomorrow's policy? Do you think Reserve Bank of India is pretty much going to play to the script, acknowledge global pressures, and talk about a possible rate hike?
Look, I think our baseline scenario remains that the RBI is going to remain on hold. They're going to get supported from inflation front, especially from food inflation. In addition to that, the steps that they had taken just on Monday on pushing, allowing the more time and space for public sector banks to take the losses from mark-to-market losses from the bond sell-off. All of that. Having said all of that, there is obviously the risk that in an inflation targeting framework, what happens in past inflation or what happens to current inflation doesn't really matter. What really matters is what the RBI thinks is going to happen 12 months ahead. And there is always that risk that looking ahead, 12 months ahead, and the RBI could well say that, look, everything points to a higher inflation, higher than the target rate, and therefore, you could see, the RBI either changing the language or actually moving, actually taking action. Now, again, let me reiterate, that's not our baseline case. Our baseline case is that they remain put, but I would say that what they did on Monday, to me, suggests that there is a higher risk now of a more aggressive tightening cycle to start, or a rate hike actually to be announced than it was before.
Pretty much, I think, would be the key highlight in the policy statement. Any hints of a possible rate hike down the road. But Jahangir, thanks very much for taking out the time to speak with us this morning. We really appreciate your views. Not a full-blown trade war, but they are rubbing shoulders as of now. That's the United States as well as China. And we'll have to see how this news flow pans out in terms of impacting the bilateral relations between the two nations.